channel. We go live there every day trading the markets, covering world news, and talking through setups in real time. Hit subscribe so you don't miss the next session.
Still doom scrolling? Brain rot taking over? You'll focus tomorrow, right? But what if tomorrow never comes? What if it all started with one small choice? The world won't wait for you. Opportunity is moving right now. One decision is all it takes to shift your momentum. Fuel your mind and watch possibilities open up. Small wins stack up, focus sharpens, growth begins. Everything changes the moment you focus. Lock in and make the switch today. Bring your ambition into focus. Trade with Switch Markets.
Are you still trading everything manually? More traders are moving to automation, running strategies 24/7, removing emotion, and staying consistent. Now with Switch Markets, you've got the tools to build and run your own automated trading systems, so your strategy delivers even when you're asleep.
Meet Switch Markets, a broker for ambitious people who want to trade the financial markets.
You mean that I can trade things like Forex, stocks, even gold with you?
Yes, you can even trade the coffee bean market with us.
What about digital currencies? Can I trade them too?
Absolutely. Maybe now's your time to get in.
Oh, and are you regulated?
Yes, we are.
And how easy is it to deposit and withdraw? Will you charge me any fees?
It's easy. Deposit and withdraw instantly. Nice and simple. And unlike that guy, we won't grab any fees from you.
Do you have a low spread trading account?
We certainly do. Pick from our zero commission or our low spreads account. It's up to you.
Okay then, what makes you so different from every other broker out there?
Our 5-star rated real human customer support and our perks package worth thousands. No other broker can beat it.
So, who did you say you were again?
Switch to success. Trade with Switch Markets.
Getting started in trading shouldn't be complicated. You can open an account, get set up, and be ready to go pretty quickly. Now, if you've been thinking about it, take a look. Click the link in the description below. You can even start with a free demo account.
In trading, like climbing, the hardest step is to pause, hold, and trust your position. Ambition pulls you forward. Focus keeps you steady. Together, they take you higher. Bring your ambition into focus. Switch Markets.
Already trading with another broker? Fair enough. But if you haven't looked around lately, you might be missing out. Now, Switch Markets is picking up awards, offering tools most brokers don't, and their support actually shows up. It might be time for you to switch to Switch Markets. Click the link in the description below to get started today.
Discipline starts before the first punch is thrown. Focus sharpens in silence. Repetition builds control. Every movement prepares you for the fight ahead. Trading isn't luck. It's preparation. It's grit. Your fight is won long before the bell even rings. Champions trade with Switch Markets. It's time to bring your ambition into focus.
Are you still with the same broker? Now, there are better options out there. There's more tools, better support, and a platform built for traders. It's time that you demand more from your broker. Take a look at Switch Markets. Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is FOMC Live. Today, we're going to cover the official press conference from Kevin Warsh and the FOMC and the United States Federal Reserve after what was a contentious vote. I'm just reading through a bit of the headlines right now, and it was a 9-3 vote, I believe. 3 dissents. We've got couple interesting changes in the actual statement itself, so I did want to get up and run in here and get you going. I do also want to get right out to price action. 5813 EMA trading strategy. 1 minute chart. This is about as risky as it gets. We had a nice cross under right there in the development of the actual trade setup. Remember, price beneath all three, the 5 crosses underneath the 8, and now we're starting to get into that short type of a mode. For spot gold here, XOU USD, we're going to go ahead and let this one twist for a minute or two. As far as our profit targets and stop losses, remember, everything I do here is on demo. So if you are a regulator out there, you do not come down hard on me. I'm not a financial advisor. Okay, but in any case, we're getting a really nice trade right here. You can see we've got decent leverage. I wouldn't say it's huge leverage. This trade is the type of trade that you may be able to take depending on your account size and account balance. But right here, we've got a little bit of price action to the downside. We're going to manage this in a dynamic fashion. I did want to start off because this one just came across the board. Our fill wasn't real great because it was a market order, but we are seeing some bearish price action come into gold, which is up about 1% on the day. So I'm going to go ahead and let that one twist for a minute or two as we go over our fundamentals of the day. Kevin Warsh in his second Fed statement. It's going to be a blockbuster engagement here coming up in about 8 minutes. So I'm definitely going to give you the live coverage there. We're going to critique Warsh. We're going to critique the Fed and talk a little bit about what these people are trying to do to monetary policy. Maybe they're right, maybe they're wrong. But I do believe that gold is going to be in a potentially bearish position in August. I don't know that there's any other way to cut it. We've got a great breakout trade that I'm going to show you as well. In gold, we had a great trade come across the board, the Euro USD, macro support level. Also the KOSPI. If you guys don't know what the KOSPI is an incredibly important international index out of South Korea, and it has been getting lambasted the last 2 nights. The government actually set up a suicide hotline for traders that had lost too much money. I've never heard about anything like that in my life, but the KOSPI, we're going to talk the KOSPI as well. All right, guys, buckle up. We're going to go ahead and let that one twist for a few minutes and see exactly what happens. But as far as I'm concerned, 1 minute trading, you guys know what I'm going to say. It's about as risky as it gets. Between 1% and 3% is what you need to be looking at here. Nice little sell-off. I think that we're going to get the sell-off back down in to the Fed statement candle body. You'll notice that today we are not using TPO charts. The reason why we are not using TPO charts is because they don't do much for you when it comes to a big news day like the FOMC. Right now, those value areas from this morning mean precisely 0. So definitely keep an eye on it. If you showed up for some volume trading, some time price offering, some market profile, show up tomorrow. We'll be scalping futures. We've been doing very well doing that, and I'm more than happy to do that all day long, but you don't do that on a Fed day. You don't do that on a Fed day because there's just too much frickin' volatility. And that's the bottom line. So right here, we got a nice little trade developing. I want to see this break down a little bit and fill in this price bar. I really believe we have a great chance. I don't know that we're going to let it twist until we get to 1,500, though. To me, that's just sort of a guideline that we're going to use. We like to manage our money aggressively. Right now, we're up about 288, about 308, about 323. And if you have been reviewing the last couple weeks of our live streams, I've been doing more and more trading, and I've been talking about how to trade with cash, thinking about cash. So right now, we're having a pretty good trading week. We're up a couple of $100. This trade right here, we put down the initial risk just in case something blows up and we have to get out of the market as a panic. We also did that with the initial take profit. If the market goes in our favor, that's where I would think of getting out. I'm going to take the money. We're going to go up another 300, 291 for today. We went up 200 yesterday. That's not a bad trade. That is not a bad trade. Now, we're going to go ahead and I'll line this thing up for you sort of on a demo. Let's go short position. We were short from right up in here somewhere. Essentially, what a position trade would be going into Warsh's testimony here or into his presser, it would look something like that. Now, there's a big difference between being a systems trader and a cash trader. I'm a cash trader. I trade for cash. But if you guys are looking to get those bigger winners, maybe you want to go back down in here where you think, I drugged my entry there, but if you're looking at something down there, maybe we're the pre-Fed. Something like that. That could be very good for you. So I want to start off with a nice little trade there we got. We're going to be taking a look at this 5813. We've got a lot of markets to cover, and we've also got the press conference coming up. So good to see everybody out there in YouTube land, guys. Tons of guys. Arnold, who got it profitable? Well, we just got profitable. Active Steady. I'm buying Tesla. Am I safe? I don't know that anybody's safe from much of anything right now. Stocks are very, very weak because we know a rate hike's coming. It just didn't happen today. Let me see. Me, good to see Anur Hamza, good to see Anur. Active. What about Tesla? Well, I mean, I'll cover Tesla here in a second. If you bought Tesla, are you safe? I don't know. Maybe, maybe not. It's hard to say. It's a challenge. We'll get to Tesla here in a second. Lyndon, good to see you, Lyndon. Tuku, Ralph H. over there in YouTube land. Be sure that, or not YouTube land, but how to trade. Remember, if you want to talk to me, if you want to send me a private message, tell me anything you want, you can go on over to the howtotrade.com website, get your free subscription, send me a PM, and I will get back to you. I answer every single one of them. So we're going to go ahead and monitor that sort of demo position right there. But, boy, I'll tell you what, when I get a chance to take 300, I'm taking it right off the bat. So, Pack, I'm good to see you. I thought my Lambo would come in today. Yeah. There's a lot of people that were thinking their Lambos were coming today, and they may or may not ever get their Lambos. That's for sure. All right, guys, Fed decision. Here you go. This is what we're talking about today. Trade the reaction, week 31. This is the big dog. This is the big one. FOMC Live, the one that we've all been waiting for. This week's central bank events came in as forecast, 3.75%, 3.50 to 3.75%. That is where these interest rates landed. You are going to see the BOE is going to hold their rates static, and you're also going to see the BOJ hold their rates static. I don't expect to see any moves out of these bankers this week. I think it all really came through with the Fed deciding that they were going to say, hey, we're going to go ahead and hold rates and see what happens. Expect the other ones to do exactly that. That's what I would say. Now, remember, how does the Fed impact the Forex? It's bearish for the USD. Expect weakness versus the FX major. That's also going to send stocks potentially higher. Hawkish. Essentially, that's sort of what happened today. And we're going to break it all down for you, but that's bullish for the USD. Expect strength for FX majors and also weakness in commodities and also maybe weakness in risk assets. So that's absolutely imperative. We understand that. The other thing, Iran war heats up. We have huge news there. I may talk about it a little bit after Warsh is finished, but this is big. Iran launched some missiles, latest missile strike on U.S. bases in Jordan. Trump is talking all kinds of trash right now, saying he's going to light them up. But, well, we'll see if it happens. But WTI crude oil is right at $85. Major shift in market sentiment. Stocks down, oil up. That is a big deal right there. And then, of course, we had a couple of trade ideas. The NASDAQ trade idea not doing great. That's for sure. This gold trade, though, fantastic one. I'm loving the setup, guys. If you're going to play gold in the next month, just be ready for it. Our daily compression. Look at this daily compression right in front of June's low. More than likely, we're going to go off the board in July. That means we're going to have June's range inside month, potential bearish break all the way down to 3,700. I've been yelling that one from the mountaintops lately on all sorts of social media, but I love a $10 move, a real fast $10 move right beneath 39.42, and we've got our trade idea all lined up and ready to rock and roll. All right, let's talk to Fed for a minute here, and then we'll get around to listening to Mr. Warsh and his presser. Addresses growing dissension over rate decision. Here's what changed in Fed's second statement under Warsh. These things are a lot closer, or a lot shorter, Warsh is not so much of an academic, but right here, this is what's big. 12-0, 9-3 vote. That's big. That means there is trouble in paradise. There is angst in the boardroom, and that is good for us. I mean, we're going to have great trading, guys. We are going to have great trading. The committee decided to hold the federal funds rate at 3.5 to 3.75. The committee is continuing its policy of maintaining ample reserves in the banking statement, essentially guaranteeing liquidity. That's big. Why is liquidity big? I know we're getting a crash course in a lot of things here, but the Kospi. Big liquidity concerns out of South Korea. The chip sector is melting down right now. It is spilling over into our NASDAQ. Everybody says, is the AI bubble here? Is it going to pop? Is it over? This Kospi, that's one of the biggest one-month turnaround that we've ever seen, negative 33.19% for what many would call Kospi backers are going to call that. They're going to call that Black July. No question about it. Just like Black Monday or Black Friday, Black July. That is a big-time sell-off. I've got support down there right around 5,000. I believe that's accurate. We just got to wait and see exactly what happens. Well, the gold trade's sort of fiddling around. That does not surprise me. As we go to the press conference, I'm going to go ahead and just sort of go around the horn on some markets. So if you have any questions, you be sure to ask them. Okay, let's go right here. And let me get our sound lined up. Desktop audio. I think we should be in good shape once Mr. Warsh begins talking, and I'll do my best to keep the charts centered, guys. You should be able to hear me. Warsh hasn't said anything yet. We'll see if he does. I'm going to be looking at all sorts of different commodities and or and stock indices. I'm probably going right to my NASDAQ, but look at that. Sometimes being a cash trader is a lot of fun. Do we want to take the long side of the gold market here with another 5813 trade? Let's have a look.
Good day. My second FOMC committee meeting as chairman has come quickly. It's probably too early to call it a streak, but our discussions again were collegial and constructive. I'm truly lucky to work with colleagues so capable and mission focused, and so determined, like I am, to sharpen the performance of the Federal Reserve. Today, as you know, our committee decided to vote by a 9-3 vote to maintain the target range for the federal funds rate at 3.5% to 3.75%. The committee is continuing its policy of making ample reserves in the banking system. The economy is showing impressive resilience. Even with recent shocks, the trends are positive and reveal solid growth. Job gains have kept pace with the workforce, and the unemployment rate has changed little. Inflation remains elevated relative to the committee's 2% goal. The committee remains resolute. You've heard this before, but we will deliver price stability. As before, the policy statement conveys just the facts. It's steering clear of forecasting, a choice we consider especially prudent at these uncertain times. Uncertainty, however, does not mean a lack of clarity. For some households, businesses, and market professionals, 5 years of high inflation have left a mistaken impression that's hard to shake, that the Fed's implicit inflation target was somehow above 2%. Let me reiterate, there is no soft inflation target. There is no soft implicit target, not on this committee's watch. There's only a target, and it's 2%. Not one of my FOMC colleagues is under any illusion. We have begun a new chapter, and we understand that the 5+ years of inflation above target cannot be cured in 9 weeks or by a single month of modest price decreases. This Fed will not waver. Our credibility rests on performing our duties and delivering on our responsibilities. Americans are right to expect that because our nation's prosperity depends on it. To the regulars here in the press room, today's assessment might sound familiar, yet there was nothing inertial about our discussions, our policy, or our strategy. 2 economic developments are worth highlighting. The first is a very notable change since our last meeting 42 days ago. Nominal and real yields are materially higher across the Treasury curve. In fact, some of the increases in market interest rates between FOMC meetings are among the most significant in the last 2 decades, ranking around the top decile or so. But if the committee didn't change its policy rate, what happened? In the intermeeting period, market attention centered on real data and real economic developments. Prices reacted in real time to incoming information, and the reduction in forward guidance may have been a factor. Market participants are learning to play the ball, not the referee, and market prices will continue to respond in the direction and magnitude they see fit. This is, in my view, a change for the better, and we're just getting started. After all, the central bank need not always and everywhere be the center of attention. I understand the desire for rolling forecasts and commentary from this committee, but for our part, we need to observe market reaction to developments, direct and unfiltered. I want to stress, of course, that decisions by this committee matter a great deal, and where necessary and appropriate, we will not hesitate to act. A second economic development is one that I noted at the congressional oversight hearings this month, but it's worth repeating. The most striking feature of the economy is the strong growth of business investment. the surge in high-tech capex has been remarkable, but that does not necessarily make the Fed's role any easier. In the AI-related category of high-tech equipment and software, the most recent data shows 4-quarter growth rates of nearly 20%. This is helping to sustain the healthy momentum of manufacturing output. More generally, CapEx is preparing the ground for future growth. Nonetheless, the precise timing and magnitude of effects on the supply side remain hard to predict. FOMC meetings produce policy decisions, but just as important is candid discussion of the big things that matter most. That too is a priority in this new chapter at the Fed. In our meeting, vigorous discussion centered on 4 questions, which I will enumerate. First, we talked a lot about the implications of the past 5 years of high inflation on the current policy conjuncture. To echo an old phrase, has the past really passed? Second, my colleagues and I considered the economic shocks of recent years, strained supply chains arising from the pandemic, military conflicts, energy supply disruptions, substantial increases in tariff rates, and yes, the surge in AI-related investment. These differ in their sources. Do they also differ in their effects on output and employment? Third, we took up the related question of price increases arising from shocks. The business CapEx boom, for example, is driving up prices of memory and logic chips and associated AI infrastructure. Do these changes indicate a broader inflationary dynamic, or do we just focus on them because they are under the bright streetlight? Finally, we discuss monetary policy tools and strategies for achieving stable prices. If, as the Fed has long held, interest rate policy should be its primary monetary policy instrument, how much accommodation are we getting from the balance sheet? In all of this, our work is advancing at the Fed. We're asking the right questions. And in this consequential time, we know how very much depends on getting the right answers. Of course, you've all arrived with questions of your own, so let's turn to them now.
Very short, very to the point. I like Warsh. He doesn't sit up there and babble all day. That's fantastic.
Take our questions, Mr.
A lot
Chairman.
better than Powell.
You've had a couple months now, or 9 weeks, or whatever number it is, to see the markets behave in the absence of forward guidance. I'm wondering if you could tell me, what message are you getting from the markets as to where policy ought to be right now?
Yeah, so I think officially it's 8 weeks and 4 days, but I'm not counting. The message from markets is the message from markets. What I've really been trying to do, Steve, as I think you appreciate, your colleagues appreciate, is getting an unfiltered message from markets, getting a direct message. Letting buyers and sellers meet at prices for treasuries, for the foreign exchange value of the dollar, and then trying to judge for ourselves, what does that mean about our remit? How are we doing on inflation? How are we doing on employment? We're trying not to interfere with that market signal. That's part of the reason why we've been somewhat spare in our words, why we pulled back from forward guidance. So they're reacting to events, I would say, much more directly over the 42 days since we last met. This is a good thing. As I mentioned in the prepared remarks, we've seen a material tightening, not just in nominal rates, but in real rates too. And we're observing it. We're trying to stay out of that because, many of you might be interested in our reaction function. We're interested in the reaction of financial markets.
I get that, Mr. Chairman, and I guess the follow-up question is, if the markets are talking to you, what do you hear them saying? And if it's real rates are higher, it would suggest that that's where the funds rate ought to go.
Yeah, so
Sorry.
I'm sorry, it's your question. So interpreting markets is an imperfect business. We central bankers, like market pros, can think these things are overdetermined, but let me offer some speculation. First, as we said in the FOMC statement that you got at 2 o'clock, the economy output is solid. CapEx and productivity are strong. Labor market's solid, steady. The bond market, the treasury market, it seems to be saying that as well. If I were to try to break down, disaggregate the treasury market signals, I wouldn't be able to do it perfectly. But the bond market's saying many of those same things, and that's why we're seeing a tightening both in nominals and in reals. Even while at some level we haven't done much in 42 days, the markets have done quite a bit.
Dollar yen's going to get stopped out. Calculated risk.
Claire Jones, Financial Times.
Is what it is.
You seem to have got the family
Dollar's
fight
erratic
you were
right
after
now.
at this meeting. We saw three dissents. Could you characterise the arguments that those dissenters put forward, please, and tell us a little bit why you weren't persuaded by them at this stage? Thank you.
Good question.
So I guess I shouldn't give you their best arguments. I'll give you some others. So you're right. I asked for a good family fight and I got one. That's the purpose. That's the design feature. I come into this meeting, even this press conference, heartened by what I've experienced the last 2 days. Most of our discussion were on the big questions that matter to the conduct of monetary policy. We didn't sort of hide from them. We weren't scared of them. There was a lot more interaction between and among my colleagues. It was a real family fight. My view, which you've long heard, is that's the better way to get policy right. That's our North Star. So there was a lot of agreement that I heard that we have the powers, the tools, also the authority to deliver stable prices. No walking back from our responsibilities. There was a large majority support for the decision that we made in the room. But I also want to leave you, Claire, with one other impression. There was nothing inertial about that discussion. It was an active, robust discussion about what's in the full range of what we can do and might want to do in the period ahead. You characterized accurately there was a disagreement about a decision today. I would say that doesn't sort of capture the full essence of the discussion. The path to central bank heaven requires delivering on our remit. These days that means delivering on price stability. I wouldn't measure that path in 42 days or any one particular meeting. And I came out of that meeting even more confident that this is the right team to win the battle against high inflation.
How much do you think not going in July was down to the cool CPI print for June?
So in 2 words, not much. Not much. I'd like to believe that the committee shares my views, which is the historic problem with data dependence is the data and the dependence. We are not relying on any one individual piece of data as cover or as an excuse or as validation. What I care about and what I think the committee cares about is trends on the data. Sure, we got some encouraging inflation data. I think at the meeting 42 days ago, I said something like 63 months of inflation above target. I didn't say 64, though the final calculation might be a close one. So we'll be watching inflation data over the period ahead, but I also don't want you to leave the misimpression that we're sort of breathlessly waiting that. I've called for a task force to revisit both the private and public data we use to make our decision making. That task force is out doing their work. I'll be checking back in with them the next couple of weeks, but I wouldn't say we overly relied on any one piece of data, including that data which surprised some a couple of weeks ago.
Hi, Chairman Warsh. Thanks. Neil Irwin with Axios. Thank you for taking our questions. So the Fed funds rate is now about 75 basis points below the 2-year yield. It suggests markets think you'll have to tighten eventually, about 100 basis points below most Taylor rule estimates. You're hitting your employment mandate, inflation stays high. Why should rates not be higher today?
There's a lot in there, Neil. So
E-mini
rates are higher
NASDAQ
today than they were
futures?
42 days ago. Markets have
Good
made
moves.
decisions because we step back in part from trying to influence those. Market judgments have moved up. on what nominal rates are across the Treasury curve. That doesn't mean we take them as by dictation, but we're observing them. So I think it's a mischaracterization to say that markets haven't reacted because we didn't move today. Markets are reacting in real time. In the period ahead, we've got important decisions to make about the policy rate. Markets in the intervening period, I think, have quite a bit of decisions to make. I'll see if I can put it this way. Monetary policy matters not just by what we say or even what we do. Monetary policy matters by how it affects the real economy. And these prices that we see in financial markets is one of the many ways in which it affects the real economy. We'll be continuing to watch that market information, see how it responds to incoming events, and that can help inform our decision making when we meet in 7 or 8 weeks.
How would you characterize in the family fight the last couple of days of you and the other 8 members who wanted to hold? Was that a strong conviction, or was that a hair trigger close call on holding versus tightening?
Well, I think the vote was 9-3. The broader discussion to my ear over the course of the last days showed a lot of agreement on the hard questions. 4 questions I raised at the outset about what's really happening in the economy with the shocks and absent the shocks. What are our tools and our capabilities? What's the effect on prices on output? I heard a lot of commonality on the questions. Were there different leans on the answers? You bet there was. So could people come to different conclusions? Absolutely. But my own judgment is this is a period of watchful thinking, not watchful waiting. And I think the score on that vote was unanimous.
Thank you, Colby Smith with the New York Times. You've mentioned that looking at the Fed's policy tools is one element of a 3-pronged strategy to address the inflation problem. So I'm curious how you view the effectiveness of those tools. If inflation is too high and not coming down, is the best remedy to raise interest rates?
So that was the discussion in the last 2 days. Is that the dominant remedy? If inflation continues to be elevated through the forecast period, interest rates could well be part of that solution. But I wouldn't say it's in isolation. I tried to describe in my remarks today a point that I made into the oversight committees a couple of weeks ago. I think there was a misimpression by some in financial markets, by some households and businesses, that central bankers like me, we set a 2% inflation target, but maybe we were more tolerable of a somewhat higher inflation target. In economics, we'd call that the revealed preference. And so might it have been rational for people to think, well, their inflation target's somewhat higher. What I heard in the last 2 days, what I've heard in 8.5 weeks is no. We will deliver the 2% inflation target. That is the committee's definition of price stability. So one way, absent the tools that you reference, to ensure that we get there is ensure that expectations are centered around the right number. And I think we made some progress on that. I am not suggesting we're done on that. It's worth reiterating. And ultimately, the business we're in, Colby, is performance. We are going to be judged by how we perform. And that's what we intend to do. The inflation target, making clear expectations is one part of it. Making sure we demonstrate we're responsible for it, we're not blaming as another. And our policy tools, like you referenced, is the third and equally consequential part.
How are you factoring the fact that a large portion of the inflation overshoot is being caused by supply shocks, as it's mentioned again in the statement? Does that blunt the effectiveness of rate hikes in your view?
First, on the premise of your question, it was almost as if you were listening to our discussion in the last day and a half.
Yes, you ran it through ChatGPT.
Was on trying to understand.
That's how you get the good questions.
Underlying inflation dynamics amid shocks. We take these shocks seriously. There have been a series of them that have been hitting this economy. We're not looking through them and saying, oh, they don't matter. What we're trying to understand is to what extent are these shocks broadening in their effects, broadening in their impact on prices that are quite far removed from it. Our goal is to have growth that is broadening and inflation that is becoming more limited, more circumscribed. I'll be the first to admit the shocks make this job and this policy conjuncture a little tougher, but that's among the chief questions we've asked ourselves. And around the room, people have different views on it. I tend to think in the coming months we're going to refine that view and have a better judgment, and we're going to have market prices trying to help inform it too.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. I guess I want to drill down maybe a little bit. What specifically, in your mind, would be the argument then for a pause today?
So I wouldn't characterize what we did as anything like a pause. I would characterize what we did as a rigorous review of the economic situation. I would characterize what we did as a review of the big hard questions, and I'd characterize it as a view of what our own homework is to try to resolve those questions in the period ahead. If you were to try to force a description that this was a pause, I would say financial market prices would take the other side of that. Financial market prices in this intermeeting period, they didn't pause, they reacted to the inflation data in one direction, strong economic growth in the other direction, and nominal and real rates went up. Did the Fed take an explicit change in its policy rate today? No, but I think that's the beginning of the story, not the end of the story.
And if I could, I did want to ask, not forward guidance, but looking forward. Traditionally, a Federal Reserve chairman uses the Jackson Hole Summit as a sort of a reset of monetary policy. Well, how do you look at the speech that you're going to make in August?
I look at it like a blank piece of paper right now. I have not begun consideration with the
guy's not
incredible
saying
team
anything,
here,
is he?
what would go into that document.
Not saying anything.
I think you characterized it correctly. Historically, at least from my first tour of duty at the Fed to more recent periods, it would be sort of a setting up speech more often than not of what was going to be happening in the fall. I haven't made any judgments on that, but those are judgments we'll have to come to. If I could, in the high mountain air in Jackson, Wyoming, I'd like to also frame the big questions. There is a tendency, especially with the proliferation of meetings and press conferences, to get caught up in the myopic. Did you do this by a quarter or do that? Ultimately, whether we deliver on price stability matters some, the decisions we make in 6 or 7 or 8 week periods. But they matter more, what are the big questions? What's really happening with productivity? What's really happening with demographics? What's really happening to the global economy amid the shocks? Haven't made a decision whether it's going to be a big picture speech or whether it's going to be a more traditional setup for all the action we're going to have between September and December. I will tell you one other thing that I am doing between now and Jackson Hole, which is I'm checking with those task forces. My first principle of establishing a task force is find the best subject matter experts anywhere in the world and put them together, especially put them together with other people who might disagree with them. In the next couple weeks, I'm going to be doing a check back in. I've given them time to sort of
buy
think
or
hard
sell
about
guys.
their agenda, their debate, their schedule, and when they might be ready for prime time. I'll be doing a little bit of that checking, and that may or may not inform anything I have to say.
Yeah. Brian Stretcher to the moon. Guys, this is incredibly counterintuitive. I'll break down what's happening after he's done talking. I'm trying to listen to
Chairman
him.
Warsh, I want to follow up on Colby's question.
Up and away, really. I guess buy pullbacks at this
You've
point.
said there's no cruel choice
Intraday.
between stable prices and full employment. Rates bring inflation down by cooling demand. It's generally thought that can show up in the labor market. If that's not the channel you're relying on, what is?
Yeah, so let me go back to first principles, Nick. I don't believe that either part of our mandate is generally at war with the other part. I do not believe that price stability and full employment is an either-or proposition. There have been policymakers over the last several generations who have thought that there is a strict trade-off there. That isn't my judgment. In fact, my judgment is if and when we deliver on our remit, we're going to be satisfying both prongs. we're going to have price stability and full employment. And in fact, if you want to do the most harm to the labor markets, you would run a period of high inflation that's variable, such that employers, businesses, wouldn't really know what's going on. So I think the two parts of our mandate are equally important. We have no legislative orphans here. I've been talking mostly about price stability because we're doing pretty well collectively as a country, as policymakers on the full employment side. But we're doing considerably less well on prices. That's why we describe them as elevated, and that's what's taken most of our discussion. In terms of transmission mechanisms of monetary policy, I think different tools work through different transmission mechanisms. The interest rates work through lending channels and credit channels, maybe confidence channels and foreign exchange. The balance sheet probably works through some other channels like signaling and portfolio balance. We're keeping full abreast of all these tools in making policy. But if the suggestion is somehow we're going to be fine-tuning aggregate demand so it catches supply, that's not my mental model. I don't think we're great in the fine-tuning business. We're trying to get supply and demand in broad order, but really what we're doing as we sit here today at this press conference is I think we've got a reasonable sense of what aggregate demand looks like in this economy. We're inferring aggregate supply. We're making a judgment about what productivity is. And in some sense, there's a race between supply and demand. And the surge in business capex in around AI, it's making that calculation a little harder to judge, but in the period ahead, we're going to be trying to judge just that.
And if I could ask, where exactly was the disagreement today? Was it about the inflation forecast, or was it something more around the risks, the tactics?
Yeah, so I'm going to I'll let the dissenters speak for themselves. The way I heard it over the last 2 days was overwhelming agreement on objectives and authority and commitment. I didn't hear anybody walking away from it. The judgments as to how best to achieve the price stability, that was probably the question that we were trying to answer. What's the best move? What's the best strategy? What's the best way to achieve it? And a second question that was asked is, when do we need to make those harder calls? When do we need to make those decisions? And like I said to one of your colleagues, I was comforted that markets in the intermeeting period weren't reacting to us. They weren't reacting to dots or to speeches. They appeared more than ever to be reacting to real-time events. So they're gauging themselves how restrictive the Treasury curve should be. And that, I think, has been a useful development. We don't endorse any particular market move, but I'd also suggest we observe them with keen interest.
Janelle Marte with Bloomberg. Following up on that, there was more uncertainty in the markets about what the Fed would do at this meeting. To some extent, you might think that's what you want to see. But my question is about, is there a point at which you would not want to surprise the markets if they were pricing in something with higher certainty that was opposite of what you were intending to do? What are the risks that you see associated with that?
Yeah, so it's a good question. Surprise is not the objective function. Surprise is not what we're solving for. We have a clear North Star. What we're solving for is how to make the best decisions. Almost everything else should be in service to that goal. By not spoon-feeding markets, by not previewing our decisions, by not sort of giving nudges and leans, my colleagues and I have found in the intermeeting period, what we're getting is the views from a very accomplished economist. That's the internals of financial markets. Instead of just repeating or echoing what we're saying back to us, they're giving us somewhat, not perfect, their own judgment. Surprises are not the objective, but at the same time, I would say we didn't come into this meeting feeling constrained by the full range of alternatives we had in front of us.
So some of your peers have continued to discuss how they think about policy decisions, and if you don't offer your reaction function or your way of thinking about it, how concerned are you that you're ceding control of the narrative?
So not very concerned. That's a short answer to the question. When some people that follow the Fed say, well, we don't want your forecast. We don't want your dot. We just want your reaction function. Part of me hears what we really want is your forecast. What we really want is your dot. In terms of reaction function, let me sort of disabuse people of a question that may or may not be real and be out there. Any central banker, especially a central banker where the labor markets are more or less at equilibrium. Any central banker, when he or she sees underlying inflation moving higher, he or she is more inclined to tighten policy. Again, when you've achieved the other side of your mandate and you see underlying inflation falling, he's more inclined to loosen policy. That's my reaction function, and I don't suspect it will cause people to not continue to pry for more, because the truth is, for a very long time in a lot of countries, coming out of the 2008 crisis, we're in crisis mode, we were purposefully providing a lot of information, trying to provide a lot of assurance, trying to tell people exactly what we're going to do, offering forward guidance with clarity as if we're tying our own hands behind our back. Well, in crisis mode, that strikes me as a very prudent policy. But in more benign conditions, it strikes me as worth revisiting. But markets and market participants and reporters have learned to devour all that information, so I take seriously that the pullback of forward guidance requires some transition. Reform isn't easy, but our general judgment is going to help us make better decisions, and in so doing, satisfy our remit.
Just a challenge, guys. We could potentially buy the E-mini Dow here
When
with
you
the
talk
trend.
about the
I'd stay
2%
out of this.
inflation target, what measure are you relying on?
Yeah, so
We have
I'll
to
give
see the
two
market
answers. First,
do
let me give
something.
the proper standard answer. The Federal Reserve every January
Just up and
outlines
away.
a statement of purposes and strategy.
Yeah, you don't want this.
And in that strategy document, which I believe was dated January of this year, it describes a measure of PCE inflation as the objective function there. I have enough of my own, so that's our number. We're sticking with it. Who knows, come after next January, what we might say about strategy. I suspect the task forces might have something to add. But I'll say this, some version of the Lucas critique, some version of Goodhart's law in economics should remind us that when we talk about measures of inflation or something else, and we describe those measures as being consistent with our objectives, we might make them such that they're not very good measures or very good objectives. Broadly, if you said to me standing in front of you, I abide fully by the strategy document.
Might get a
we're gonna
pullback buy
deliver
here
2%
in
inflation
Q.
and not a whisper more. But to achieve that, I'm looking at a broader set of inflation data than PCE. So without sort of fully revealing my cards, I'm trying to understand, like my colleagues, what's the underlying generalized change in prices that are happening in the economy. It is not a perfect science. I might have said 42 days ago, I've got a task force for that. But we have a data project that's trying to look and see whether we can't separate the noise from the signal. And so if you would hear a message from me, yes, I care about what the PCE prints are. I care about what the contributions are from CPI and everything else. But my lens is broader than that, even though the remit is quite narrow.
Here we go. Is the top in? That's what everybody's wondering. We're not
Michael
going to
McKee
worry
from
about the
Bloomberg
top.
Radio and Television.
We're going to grab a little scalp here.
I'm struggling a little bit with some of what you've said today, and maybe you can help clarify this. You've said over and over again that your job is to bring down prices, to get prices stable, to hit your target, and that you will hit your target. The market says you're not there yet because they've raised rates, but all you've talked about today is talking about it, and it's not like members of the committee weren't there
Listen to this
before
guy's
you
attitude.
talking about it. So
Will
I
you be a
guess what
tough
the
guy at
American
the
people might be
Fed
asking
meeting?
is, what are you waiting for?
Wow, just a
So,
politically biased
Believe it or not, this press
question.
conference is not all I've done today.
It's ridiculous.
We have spent an inordinate amount of time in the last 2 days, 2 weeks, looking at our monetary policy strategy, evaluating our tools, thinking hard about the sources of data that we have at our disposal and we wish we had. We've also thought hard about the period ahead.
Dug in down there
What
right
among
above
these
27,950.
questions will be answered
We'll see if we get a
with
little
more
pop off of
clarity,
this.
Certainly not certainty.
Not going to let this one bleed against us
The
too
decision
much.
we've made today, the discussion
Highly
we
volatile
had
in there.
that room,
Here we
was
go.
the farthest thing from inertia I can imagine. As
Boom,
a
there it
point
is.
estimate at this very
We get a
moment,
bounce,
and a
bounce,
choice
bounce,
between
210,
two
180,
alternatives.
210, 190,
You heard the
210,
results of
320,
it.
323, 22,
But I
250,
would
back to break
tell you
even,
that this discussion
110,
was far
230. Do
more
we get a kick? Give me a
robust,
kick.
and
370, 470, 670,
how best to achieve
675,
that target
out.
is advanced, and over the coming months I expect it to be advanced much more significantly. If you were to if I were to steal a follow-up question, you won't be giving it up. If I were to steal a follow-up question, well, what's the world think about what you've done? I would again reiterate, what we do isn't just about what we say. It's not just about what we do. We're in the performance business. And so if I look at the Treasury curve, if I look at the dollar, if I look at a lot of things that are internals inside of financial markets, I think what they're broadly saying is that this committee does own it, has the credibility to deliver it, and they believe, like I do, that we will. But I don't want to leave you with a misimpression. We've got no magic wand. This isn't something that we're going to be able to carry out in days or weeks, but we're going to deliver on the responsibility that Congress gave us. And today's meeting and the preparation for today's meeting was an important step towards that destination.
I'd like to follow up on the.
No, you don't need a
task forces
follow-up.
as well.
Your
And ask,
attitude's
what
bad, brother.
vetting did you do of the people that you appointed to the task
Don't give him a
forces?
follow-up.
In particular, given Mark Andreessen's substantial political spending, $25 million in just the past
Look at this,
year
just a
to back
political hack
candidates who
here.
oppose stricter AI regulation.
Shut him
How can
down.
the public be confident that a committee he co-chairs will provide an independent assessment of AI's economic effects rather than one aligned with the interests of the AI industry?
Yeah, so I selected 15 incredible subject matter experts to tackle 5 of the most important questions that if we get the answers right, we're going to do a far better job in delivering. And if we get the answers wrong, we have a problem. The comfort that I can give you and your listeners is we're the decision makers. The chairman of the board of the Federal Reserve and the members of the board and the FOMC, we will be the consumers of the outputs from 5 different committees. The judgments we're making will be informed by, but not at all determined by, these outside groups. My theory of the case in establishing the task forces were to pick people with extraordinary talent, depth of expertise, and a divergence of views inside every committee, so they too can have a family fight. This is not outsourcing to people that aren't known and haven't been vetted. This is seeing whether new ideas can catalyze a broader, better, more informed discussion inside the room. And I'm very confident that we're going to be able to do that. I am impressed by the credentials of these 15 people. And full disclosure, I've known almost all of them for a very long time. And I think they're going to give their best views on the subject. But ultimately, these are decisions we're going to make, and we're accountable to our oversight committees and to the remit Congress gave us to deliver.
So, I mean, the question is, do we short gold? No, I think it's really tough, guys.
Hi, Ann Saphir with Reuters. Nice
I
to
mean,
see
that's
you
what
again.
the trade would look like, essentially.
So I need a little help here, too.
I don't want to fight
You've
the trends,
said
really.
repeatedly you have no tolerance for
I'm not interested.
inflation.
I want to join it.
And yet we are seeing above target inflation repeatedly for 5 years and through your term so far. And sure, you have no magic wand, but you have not taken action. You just gave us a little peek at your reaction function as well. You said that if underlying inflation is rising that you would tend to think that you might need to tighten. And with the exception of the most recent inflation print, that is what we've been seeing. So could you explain what you mean by no tolerance for inflation and what you plan to do about it?
Sure. So, Anne, I hear from you what I hear more broadly from households and businesses: impatience.
I mean, essentially, that's
Deliver
your
it
wrong
already.
entry. But I would stay out of this. This is chaos
not an
right
excuse,
now.
This is a fact. This FOMC, this board has been in business for 8.5 weeks.
I'm not interested. I'm really not.
The patience, the impatience that households and businesses feel have been going on for 63 months. We are on the job. We will deliver. We are focused like a laser on making sure we can do it. But the suggestion that we're going to be able to do it with our magic wand is one I want to disabuse you and everyone else of. But the discussion in the last 2 days give me more confidence even than I had 8.5 weeks ago. This team that we have at the FOMC, the support that we have from board staff, and the new hard questions we're asking, we need to resolve those. And as we resolve those questions, get smarter on those, we're going to deliver on the remit. You don't have to take my word for it. If you look broadly at market prices, they are certainly not saying all clear, but they are working in concert to keep us on our toes, and they have tightened financial conditions in this intra-meeting period, and that has given us that has provided us some comfort that we've got the ability and capability to deliver.
And is your read or your
Getting a headline that say
faith
Trump's going to make
in
an announcement soon.
Markets,
This guys,
ability
this is
to sort of
tough.
make a judgment and then you to take signal from that judgment. Is that how does that
President Trump and Secretary of
affect you when you
Transportation
come up
Sean
on the
Duffy
September
make an
meeting
announcement.
and markets are
They're going to
saying
talk. He's
a
talking. I
near
would stay out of
100%
this.
chance of a rate hike as they see now.
I'd stay out of this.
How does that feed into your decision making and your thinking?
So we're not going to be constrained by market prices. We're not going to be constrained or take verbatim from what the market's doing. But I think it's useful and to understand that markets can be a very good source of information. Not a determinative source, not a perfect source. But if we're trying to land the plane and deliver 2% inflation, and we take a very useful source of information and we get it all fogged up by giving it our own forecasts, by providing rolling commentary, I can assure you that we're going to have less information, less ability to land the plane successfully and deliver price stability. We're just trying to make sure that that source of information is as direct and unfiltered as possible. It isn't to the exclusion of data sources and opinions and other surveys. But if you're hearing from me, we wanted to make sure we were getting a better source of information. I think in a relatively short time we are.
We'll go to Brian Chung for the last question.
Press conference is extended much too long.
News. So
Trump's talking
you said
now.
you'd be
He's
open to having
talking.
press
This is
conferences
trouble.
When there's news to make. So
Watch out.
Today, no change to rates, no forward guidance. For the average household, I guess, what was the news today?
So apparently it was news that I had a press conference. Let me just see if I can offer some clarity on that. Between now and year end, my predecessors and the Federal Reserve committed to press conferences this year. I'm committing to press conferences this year. That might be news to the people in this room and of no particular interest to your viewers and your readers back at home. What I can offer as assurance is that the Fed's on the case, that this Fed chairman feels better about this board and this committee's ability to deliver than I did when I showed up here on the first day, and I showed up pretty confident. I've been heartened by the reception that I received. No doubt in some of your commentaries today, you'll talk about a divided Federal Reserve. Well, that's not the feeling I felt the last couple of days and the couple of days before it. What I felt was a group of professionals, all with different perspectives, different views, different judgments, but eager to roll up their sleeves and have a family fight. and eager to reform the way in which the Fed does policy, a keenness and open-mindedness and curiosity about that. So we have a far better chance to deliver on the remit that Congress gave us. And so I want to leave you with the optimism of a new central banker that we're committed as ever to deliver and to offer an assurance we will. Thank you all very much.
Okay, so a couple of things come to mind right here. We heard the term family fight an awful lot. That's good. That means they're arguing, they're having a debate, and they're a 9-3. I believe it was a 9-3. Voting against the monetary policy action was Beth M. Hammock, Neil Kashkari, and Lori K. Logan. Kashkari has sort of always been outspoken. Seemingly, when they want to hike rates, he wants to cut them. When they want to cut rates, he wants to hike them. He's always sort of the contrarian. So I wouldn't put much stock in Kashkari going against today's decision. I would have to do more research into Beth M. Hammock and Lori K. Logan. I genuinely don't know much about those folks. Remember, the FOMC does rotate, so some of these members may be brand new and they may be holdovers. I would have to look into it and do more research for you. But what we do see is we saw the one gentleman, I don't remember his name, but you saw the question, the structure of the question, and you also saw the tone. The tone was pretty ridiculous. The idea was like, why didn't you hike right now? Why didn't you hike right now? Because if they hike right now, they know that further military operations are more than likely going to happen from the United States against Iran. They know that right now, believe it or not, I'll give you your leading indicator. If you want to take a leading indicator at the United States markets, take a look at what's happening to the Kospi in South Korea, the Kospi Composite Index. This is big. Semiconductors. These are chip makers. This has been an absolute catastrophe the last several weeks. I mentioned it at the beginning of the live stream that we had, what do we have? The government decided the South Korean government was going to launch a suicide hotline for investors that have been destroyed by the last 2 days. This has been an absolute, stairway to heaven. That's a stairway to hell right there. I mean, you are coming off, and you're coming off in a big way. But the last 2 days have been absolutely extreme. 10% loss. Another 6% there. Circuit breakers have been getting hit on the regular. So when we start looking at the cost speed, you say, okay, Shane, who cares? It's a developing. I go, it's not a developing economy. Tremendous amount of wealth in the South Korean chip sector. This looks to me like it could be the leading, maybe a leading indicator of what's potentially brewing in the NASDAQ. Now, I'm not going to say that for sure because I don't know, but I do know that this is pressure. The Korean government is meeting with the central bankers, Korea's central bank, and what that typically means is quantitative easing. It means what Warsh was just talking about from 2008, what the Fed did in 2008 was essentially they launched TARP 1, 2, and 3, which was a version of quantitative easing. It wasn't like unlimited QE of COVID. It was limited QE, and that was the old too big to fail. Remember that when they propped the banks up and they wouldn't let them go under? I remember it. I was there very well. Main Street went under. They didn't let the banks go under. So Kospi, South Korean economy, take a good look at it because this right here could be a warning shot that we just maybe need to put a little bit more attention into. I mean, this is really some serious stuff that's happening in that market, in that economy. And it spill over? It's really hard to argue that it's not spilling over. Take a look at your Dow Jones Industrial Average today. You're down about 1.41%. Now, that's not huge. I mean, that's not like an 8% loss or something crazy like that, but it does suggest that things are maybe weakening a bit. You can see we're in position to close with a negative month there. The NASDAQ, you have a much worse scenario. You have back-to-back negative months. Now, believe it or not, this is the reason why a lot of these folks are talking about the AI bubble, the tech bubble really popping like it did. I mean, I've heard comparisons to 2000, the meltdown, the tech bust that we had in 2000. I don't think we're there yet. I really don't think we're there yet, but this right here, this doji, this long-legged doji or dragonfly doji or whatever you want to call it, that's brought a lot of people to the table saying, okay, the top may be in. And if you don't believe that a lot of these decisions that people make that are on CNBC and Bloomberg, and they're constantly giving you their opinions over and over and over again, it could be as simple as them just pulling up a monthly chart saying, okay, doji sell-off. Yeah, the top might be in. Well, I mean, everybody pretty much understands the severity of this sell-off that's hit the NASDAQ this month. You're off about 8.5%. That's not good. That's going to get everybody essentially talking. So what would the shorts look like? Let's say if you're short up there, your stop out's going to be somewhere up there above your doji. And a lot of the folks that are shorting, I can't remember the one guy's name that was he was a heavyweight short seller. He's been all over the market saying he's shorting all these AI companies and things. Duffy, something, Sean Duffy, Duffy, I don't know his name. In any case, something like this would be what an investor like that would be looking to do. They'd be looking to say, okay, I want to see a sell-off down to that April tariff panic we had back in 2025, and then we'll regroup and maybe go up from there. That's essentially would be their play. To me, I don't buy into that. I don't sort of subscribe to that point of view. I think that you have a helium shortage coming out of the Persian Gulf. You've also got energy troubles. You have a war that's getting ready to kick off en masse. Many of us believe the United States is going to escalate. I'll talk more about that as we get towards the U.S. election in the fall. But with all these market drivers, could that be the reason that there's a little bit of angst in the NASDAQ? Of course. Could it also be overbought? Of course. Let me ask you this last question, and then we'll go ahead and we'll take a look at a few key levels for the Forex and then call it a day. Look at our scorecard. We traded pretty well today. I'm not unhappy at all. The real question is what is the problems in South Korea and the Kospi, and all of a sudden the big negative print we're having in the NASDAQ? What does that do to those IPOs that were coming? Anthropic, OpenAI, these were going to be some of the biggest of all time. Right next to what other IPO? One that we talked about a lot as it was breaking. That's bad. So this right here tells you that maybe all these big tech things, the AI, the cloud services, all that stuff, your Starlink. I mean, SpaceX is somebody that has infrastructure. They do have the Starlink satellites in space. They are going to be a player in things like data centers and cloud computing. What is Anthropic bringing to the table other than AI technology? What is OpenAI bringing to the table other than maybe being a powerful tool for content creators, researchers, and even traders? What are they bringing to the table? Are they bringing anything that's hardware-oriented? No, not particularly. So what does that mean for their IPOs and their prices? If I'm an Anthropic or if I'm OpenAI, I don't know that I have my IPO this year. I'm thinking maybe next spring. I'm thinking maybe we'll revisit this next summer unless they truly believe that the top is in and they want to get as big a valuation as they can. This was the biggest IPO of all time, SpaceX. And look at where you're at now. 113, you're at about half of those highs. You're $100 off, and that did not take very long. And just look at that daily chart. It is not pretty. It is not pretty. So do we go lower in SpaceX? Maybe, maybe not. I always thought 80 to 60 was going to be a great buy, but right now we're sort of hovering right around 115. Not bad. 110, 115, not bad. All right, let's talk a little Forex, and I'm going to go ahead and sign off. Let me see. Best regards from Brazil, Daniel. Good to see you, Daniel. Welcome. Let me see. 512 Eli. How does the Kospi affect the NAS? I hope I just covered that a little bit. The Kospi is a big deal because it's a semiconductor. And number one, when we're talking about big tech, and we're talking about speculation. I mean, these things are trading so far forward on their earnings potential. We don't even know if Anthropic and OpenAI can make money. We just know that there's billions and billions of users on these platforms. And the idea is that, okay, we'll monetize it with our giant usership potentially, and also the applications. Theoretically, I could sit down and make an argument that AI can impact everything in the world. Could we figure out a way that AI can keep my coffee hot? Probably. So if I'm interested in paying a premium to make sure I have a coffee cup that makes my coffee always hot, then yeah, that could be potentially a way to monetize one of these big companies. I'm curious about their ideas. Sure, they've had the big idea, the quantum computing, the AI, where it goes from here. It's amazing. It really is. But how many of these ideas are going to be complete ducks? I mean, how many ideas are going to be just complete flops? That's what I want to know. Do I really need AI to keep my coffee hot? No, I don't. I need a coffee maker for that, and one of these nice insulated mugs will do it. But AI may make it look great. I'm curious how many of these ideas that come out of OpenAI and Anthropic will flop. There will be a lot of them. SpaceX, they're going to have theirs that flop too as well. All right, couple of Forex. So that's how the Kospi is looking, man. This is forward thinking, and anytime you see a tech-oriented indices like the Kospi crash, think semiconductors, think AI, and everybody's sort of sketchy right now on AI. Anyways, what's going to happen? Is it going to grow? Yeah. Is it going to grow profitably? That I don't know. All right, Great Britain Pound USD. This is going to be a big one. Remember, BOE is going to get involved during the U.S. overnight session, going into the Thursday session. And what you're more than likely going to see is you're going to see the BOE hold the line. That's my personal guess. We sort of had that. We covered this before. Kevin Warsh came out and sort of gave his 2 cents on what's happening. But central bank key events, we thought the Fed was going to stand firm. I was a big believer in that. There was guys on. There was one person on Kalshi that had 350,000 on a rate hike today. I said, man, that's a lot of money to take a shot on that. They lost. And then a Citadel came out and said they were going to get a rate hike today. So maybe that reporter that sort of had the sour face that was busting Kevin Warsh's chops in there, maybe he was one of the guys that put down 50,000 on a rate hike today. I mean, it was so combative. That guy was the only one in the room that was combative. Everybody's so happy they don't have to listen to Jay Powell anymore. And you got one guy in there that's, I'm combative. I'm going to bring it. And then he asks a follow-up. I wouldn't have given him a follow-up. I just said, nope, I'll see you next month. In any case, rates stayed the same today. We're expecting the same thing out of the BOE, 375. We're expecting that to stay the same. And then you're also seeing that vote count. We're expecting to stay the same, 7-2. Don't be surprised if the BOE, if their vote on their board of governors does shift a little bit. I would expect that because there is division in the opinions over where monetary policy needs to go from here. That's a big division, so I wouldn't be surprised to see the vote change. That will rile the pound up a little bit. The BOJ interest rate decision, I mean, realistically, if the Bank of Japan wants to restore some strength to the yen, then yeah, now you would hike. You would hike a 1/4 point, and you would try to restore the yen against the pound and the U.S. dollar, at least in the short term. You could probably do that. So if you're going to get a surprise here, I think it's going to come out of the BOJ. But in all honesty, I just don't know that you're going to get anybody to do anything after the Fed stood pat. I think that it's sort of all eyes on the Fed right now. It usually is, but this seems like it's even more so. All right, couple of big levels that I would be watching, though. Great Britain pound USD, you're looking at right around 132. That's been sort of my pick to click. I understand that's a long-term monthly chart, but I would be remiss if I didn't mention it because we are only about 160 pips away from it. So, you'd love to see a sell-off and then get another opportunity to bid this, maybe even in early August. That would be a number I would have down, 131.93 to 132, maybe 132.25. That is robust. And I mean robust downside support right there for the pound. We had a great trade that came across the board in the Euro USD. I tried to show it, but Warsh was talking, so I couldn't really walk you through it. It's a bull flag. It's a lot like that pound we just looked at. But there's your big sort of your run. And for about the last year, we have traded in this zone between 120.83 and about 113.50. Big zone. I'm not saying it's complete compression, but you can definitely see the line in the sand. The line in the sand's right down there, right around 113.50. And so 113.50 to 113.75. Let's go ahead and take a look at a 30-minute chart, see exactly what we mean. There it is. We hit it beautifully, and I mean beautifully, yesterday. It was absolutely perfect. During that U.S. pre-market, we came down, hit this beautifully, and then you got the big break. Really a nice accumulation trade, and one that fantastic. That's all I got to say is fantastic. So good level, still looking at it. If we get another shot at it, I would consider taking it, but the bottom really did hold up there for the Euro USD. And we're still looking at those gold sells. I want to see the gold sells develop in August, the breakout beneath July's low and then also June's low. If July trades inside of June's range, monthly range for the XU USD, we've got the trade idea out. I will be more vocal on it tomorrow and Friday. That could be a major mover to the bear. All right, everybody, let's go ahead and take a look at our performance here today. I do a lot of demo trading and stuff, but the ones that we do take on these live streams, we're starting to look into exactly what we need to, well, I don't know what you'd say, just sort of keep a better track, I guess, of what we're doing. So right here was your paper trading. Let's go right to our order history. Let's go balance history, and we'll keep a running tally. We'll talk about our psychology as we roll into the end of the week. You see something right there. I'm guessing, yeah, those are your commissions. So we traded those. Those are sort of your commissions. So we had one loss right there. You had one loss that we took right there in the U.S. dollar, Japanese yen. We also had the $10 commission there. We had a 620 winner right there on that NASDAQ futures. That was beautiful. Pullback, 5-minute Fibonacci level. Really made our day. And then you also got your $10 commission there. But the beauty of this really was, I mean, we started off just sort of on fire down here. We had the 210 winner there, and then we had the 254 that we took right away off of the gold trade. That's fantastic. So today, we'll ignore that one. That was from yesterday. I'll have a running total for you tomorrow and Friday. But Mondays for game planning, Tuesday, Wednesday, Thursday for trading. We've had a very strong Tuesday, Wednesday right there. So your Tuesday was, you're looking at 210 there. You're looking at 254 there. That's pretty solid. So you're right around, 460. If you wanted to take that off, then you're somewhere right around 370-ish, 360-ish, and then there's your big winner. So we're right around 1,000 for the week, 2 sessions. Not a bad day's of work, not a bad 2 days of work. Always difficult trading after the Fed, but things are looking pretty good. And we've got our commissions fit in. I believe I took some sort of demo trade last week that didn't produce anything on this account, but you can take a look at our performance from last week as well. This performance has been relatively strong. You'll notice one thing if you are following along the live trading stuff. Remember, demo dollars. I'm not sitting here representing like I'm trading real money. Potentially sometime in the future we will do that. I'm not an investment advisor, and I'm not a money manager. I'm just showing you pretty much how I would trade these events. We use a lot of our strategies. Today, the 5-8-13 was pretty good in gold. To be real honest with you, I missed those trades. I missed the getting bullish stocks. We could have easily done that on the 5-8-13 and made stacks doing that. That was a fantastic rally. As far as our Fibonacci buy, that was a good one. That's a trade that when the symmetry is that clean and nice, very, very difficult not to take those 38% buys. So we're going to talk more about cash trading and more about what your psychology is as we roll through probably the next several months or so. We're going to sort of shift more into the live trading stuff. You'll notice one thing that happened today, though. We did not even pull a TPO chart, a time price offering chart. And the reason why you don't trade market profile or TPOs on a day like today where you have such a big market mover is that the ranges just don't mean anything. The value areas don't mean anything. A point of control, it doesn't mean much because there's the ranges are so big and there's so much volume coming in all the time based on pretty much every word that comes out of Kevin Warsh's mouth. It's one of those things that we just sort of say, there's a better way to trade it. I prefer crossovers in a situation like that. Crossovers can be pretty good. The 920 EMA crossover, we're going to do a workshop Friday, so I encourage you to join me for that. I would say it's probably my favorite out of all these. I like the 5-8-13, but the 920 is pretty good. We're going to talk about what time frames you need to be executing on. I like it as more of a swing trading strategy. However, you can trade it intraday. You just got to dial in your time frame and the time of day that you're trading. So right now we are watching the world go down the tubes. You're about down 920 points on the Dow. Our NASDAQ is just sort of decided to fall out of bed, down around 27.5. Those NASDAQ longs, I'll break those down for you tomorrow, but I think you have to pull the plug on them. Probably should have pulled it right when the Kospi started going south. And then we see U.S. oil. U.S. oil's back up above $85, $7.50. Right now, Trump's deciding the size of the retaliation against Iran for the missile strikes yesterday that were intercepted. However, the surprise sort of came out of nowhere. So that's where it's at. Nessie, what do I think about gold? I'll cover gold again tomorrow. I've covered it several times, but for right this minute, I have no desire to pile into the gold market. I really don't. I mean, if you want to just take a look at what we have here, it's just not good. I mean, it's really choppy. 1 minute chart, really a beautiful pullback. We could have taken that. That was a nice one. And then now we're coming off. You could probably buy 4,075s right here if you want. But remember, Trump's speaking right now. We're talking about probably military operations. I just don't believe that you should be doing any of this right now. I really don't. I would stay out of the rest of the day. 30 minutes, 27 minutes till the New York close. See that? I mean, that right there, I'm just not interested. 75, I mean, we could buy it right now and look to get a bump maybe up to 80, and we should be okay. But this feels to me like there's too many. Yeah, I mean, this is going badly. I mean, you're down 1,000 points in the Dow now. This is just, you stay out of stuff like this, you know. And after watching these things and trading Fed Day for, you know, I haven't traded it for 15 years, but it's been, I would say I've been trading it every Fed Day, covering it extensively for the last decade. And I can tell you that days like today, we have a much better chance regrouping, game planning, and coming back tomorrow and kicking some tail tomorrow than we do trying to force a trade right now. So as much as I hate to tell you not to trade, I don't think you trade right now. I think it's a bad idea. Josh, good to see you. Josh, welcome. I'm new to fundamentals. What does today suggest for the DAXY, or excuse me, the DXY? It's not the DAXY. That's what they call the German DAX. The DXY bias over the coming weeks. So DXY is going to be your essentially what it's going to be. It's going to be your dollar index. I've really been working. You can see on my scribbles. That's fantastic. I mean, people look at this stuff and go, man, what's wrong with you? Well, I'm sort of a telestrator. If you guys are sports fans, I remember the late, great John Madden. He was great on the telestrator. And I grew up watching him, so I just grabbed grab the crayon and just draw you a picture, essentially. So what does this mean for the DXY? Well, essentially, in my view, you're probably going to see the dollar get stronger. Think about what's going to happen here. You're going to get a rate hike. We know it's coming. I would say it's probably a 90% chance that you're going to get it in September now. However, Warsh didn't say that. And he said, hey, we're going by the data. We're not, or excuse me, not the data, but we're reevaluating the data that we use. So that's not a lot. You can't lock that in the woodshed and say that it's a for sure thing. However, what will send the dollar higher is a war and escalation. Every time the United States and Iran have escalated things, the dollar's got stronger. More money's flown in to T-bills. We've seen bond yields go up, and a lot of that has to do with safe haven, and not necessarily desire, but I guess desire is the proper word. I guess the demand for safe haven assets other than metals. A lot of folks believed that gold and silver were highly overvalued. And as soon as this war kicked off, we saw a significant, what are we down, about 20% in gold since March? So you're down 20% in gold. Silver's taking it even worse, trading 58s. We were trading 120s at one point for silver, 115s. So this is ugly stuff for metals. And I think a lot of what you saw was the institutional traders. They want safe havens. They just don't want to hold any more metals. A lot of people would argue with that, but I say the charts tell you everything you need to know. So when we start thinking about a war coupled with rate hikes, coupled with maybe more than one rate hike or maybe an aggressive move by the Fed to shore up either its balance sheet or interest rates, then I'm definitely looking at the long side of the DXY market, the dollar, the U.S. dollar index, of course. However, all of that's great and all that's fine and dandy, but don't throw our technicals out, Josh. Don't throw our technicals out. Fundamentals, I talk a lot of fundamentals, and we also have a lot of technicals we use on these live streams. My favorite, Fibonacci retracements. That's my weapon of choice. To me, this is the range for the U.S. dollar. Donald Trump is sworn in as president right there back in January 2025. And then right there was sort of your spike low, January 2026 low. So that right there is sort of a year's trend, downtrend. Traded sideways really going back to the tariff panics of last June. And now you're right up to 38%. 38% is the make or break. If we become established above 38%, then I think that the bullish bias goes all the way up to about 103, maybe even 105, coupled with rate hikes and enhanced war operations. That's the way that I see the DXY panning out. However, our technicals paint a very strong picture. If you're beneath 101.15 or 101.150, however you want to say it, this bearish bias is still extremely valid, and we have to respect the downside of this market. So the fundamentals, to me, they all point towards a stronger dollar. I'm seeing that unfold right now in front of our eyes. Now, negative bearish close for July. August will be a pivotal month. We either break high and break to the top side, or we break low, and this bearish trend continues. I think the jury's still out. The fundamentals, to me, point towards a bullish U.S. dollar, but the technicals, I don't throw my technicals out. No way. No way, that's for sure. There you have it. Nessa, yeah, good to see you. You're welcome. Let me see Jason. Boom, he's on his back. I don't know who's on whose back. That reporter should be on his back. That was ridiculous. Such a combative tone. Just combative, and I wouldn't a follow-up question. I wouldn't have given him a follow-up question. No way. No way about it. All right, everybody, I think I'm going to go ahead and sign off. SpaceX getting smacked right now, 111.68, down 4%. This game is definitely shifting. Let's go ahead and just before we sign off, let's take a brief look. That's a major move. This is one of these that we're going to sort of see. Let's go ahead and get that down. Let's go ahead and see exactly where we're at. Gold, there's your cross under. This is big. This is big boy trading. These are moves. 5813, there's your cross under. If you're trading the NASDAQ, E-mini NASDAQ 1 minute chart, 5813, right there's your bid. You get in trouble with sort of a weave here, but there's money every time. That's a big move. That's a big move. You're probably looking for it to cross over so you get the bid. This thing is absolutely falling out of bed and cratering, though. Are we seeing a market crash? We're down 1,100 points in the Dow. That's 2%. That's not good. That's not good. Let's step back to 30,000 feet and see if we maybe get a trade here. Monthly Dow, E-mini Dow futures. $50,467. It's coming into view. It's coming into view. So you're probably more than, I mean, that would be more of a position trade. You'd be trying to get that. It's about what, 1,200 points down the queue. Man, if this keeps up, we could get that tomorrow or Friday. That would be a bid, though. That'd be a position bid. Maybe keep an eye. I'm out for my trade idea a little bit later today. I'm going to let the dust settle, and then we'll have a daily write-up, and then we'll send out a trade idea. But interesting stuff right here. That's for sure. I mean, this is a major sell-off. That's no kidding. Let me see. Oh, John Madden. Yeah, boom. He's on his back. You guaranteed a little bit of whap and a little bit of boom. No, Madden was one of my favorites. That's for sure. You're welcome, Eli. Yeah, I gotcha. John Madden. God, I played so much Madden growing up. That's for sure. Any poly market today? Yeah, we'll look at poly market, and then I'm going to go ahead and sign off. We've been going for a while here. Fed decision in September. No change. 25 points. I'll take that bet. I would take that. 50-50. You're giving me even money. I'll take that wager. Absolutely. Iran. What's going on in Iran? Strait of Hormuz traffic returns to normal by 31st? No. That's not going to happen. How about December 31st? Yeah, that's optimistic. That's optimistic. We have seen no movement in 5 months in the Strait of Hormuz. Halt to offensive operations. Yeah, I want to see that one by December, right? This is a big one. Will the U.S. invade Iran before 2027? You remember back in March and April, we thought that, yeah, more than likely, going to make a play. Look at, we're back 30%, 31%. We're talking ground invasion here. I expect that to go higher. Nuclear deal? Nope. Karg Island? A lot of people talking Karg Island these days. We need longer durations. We need the longer durations. August 31st. I mean, that's a real long shot. But the United States has ramped up military assets in the region. It's possible. A lot of talk about taking the islands. Iranian blockade. You can't bet on things like this because Trump will he'll put them on and take them off. He'll put them on, he'll take them off. Interesting. So they're saying that this is not effectively closed yet. Yeah, I would take this bet. They're going to close that. I think that the Houthis in Yemen are probably a far greater target than they know. I think the United States would much rather go boots on the ground potentially in Yemen, just because of the topography. We'll talk more about that, though. There's a lot of research and stuff that goes into that. I don't just want to say these things like I'm snagging them out of left field. Seems like everybody does that now. But maybe something like that, I would expect them to close it if they can relatively shortly. They've already slowed traffic way down. It's just a question of, when does it happen? But this stuff here is just fickle. And what does all of it mean? I mean, this is really what it all boils down to. There's a lot of pressure. 86% chance the Democrats are going to take the House. I think that's a foregone conclusion. This is the one that really is scaring everybody. 56% chance, and not necessarily scaring everybody, but it's scaring the markets. If the Democrats take control of the Senate, a lot's going to happen. There will be investigations, and that's going to happen there. Democrats take the House. They're going to control the purse. That means the war funding is going to go away. That means you're going to get an impeachment day one. Trump's going to be in impeachment proceedings again. It's going to happen more than likely. I mean, this looks to me like it's going to be a big-time blue whitewash, no question about it, as it stands right now. And if you launch a ground invasion, and oil prices, let's say crude oil does go up to $200 a barrel or $150, and all of a sudden you see that recession set in and the inflation jumps, these seats right here could easily go blue, easily. So there's a lot going on here, guys. And we've got, just buckle up. It's going to be really a great year to trade. I'm convinced of it. Had a lot of fun the last few weeks doing more live trades, though. It's been good. I'm enjoying it. All right, guys, I'm going to go ahead and sign off for today. Let me see. Angelique, what are good pairs to swing trade? Well, I mean, swing trading, we could talk a little bit about it, I suppose. You take a look at this. I thought this one was a good one. Here's our 9 EMA strategy. Right there was our bid, our Kiwi bid. Our stop loss was absolutely beautiful down here. And then we got the big number that really just sent us. That would be a pretty good swing trade, Kiwi dollar, something like that. But I don't know that you can hold a position against the U.S. dollar in this environment. So you're probably going to be looking at like a U.S. dollar. I mean, I wouldn't swing it. I wouldn't carry trade. I wouldn't swing trade anything this week, just because you got the BOE setting up. You've got what else do you have? You have the BOJ. You don't want that. How about Dell? Dell's going to pay us. We're doing well on that Dell short. That's a pretty good one. But to answer your question, Angelique, good pair to swing trade this week. I don't know. I really don't know. Too many central bankers for me. I would wait. I would wait to swing trade for next week. I think that's better. I'm scared of the take control of the Senate. Well, I think it's very possible we could see a major. It's hard to say. It really is hard to say. But it traditionally in the U.S. Congress, the opposition party takes control. So, like if you have a Republican president, a Democrat would win the House of Representatives. You have a Democratic president, the Republicans win the House of Representatives. That's just sort of how those elections go. Historically, that's typically what happens. The Senate, though, the turnover of the Senate is a big one. And you got to take a look at what's happened in the U.S. Senate. You've got Lindsey Graham died. And then you had Mitch McConnell. Nobody's even seen him. His health's supposed to be bad. I believe we had Steve Daines here in Montana step down. The Montana race is going to be an interesting one. So to me, I look at this stuff and go, I think it could go any number of ways. And if you spike the war off, and if it kicks off, and inflation and recession and all those things come to pass, like many experts believe, then you're going to have a major political turnover here in the United States. And that's going to mean a lot of different things to the markets. A lot of different things. Let me see. 512 Eli, did you hear anything about Ukraine striking Iran tanker carrying weapons? Yeah, I did. Yeah. I mean, I'm not smiling because I'm happy about it. I just think that you're seeing the look at what we're talking about now. We're talking about Yemen and the Houthis being involved. We're talking about Ukraine potentially being involved. We know that Iran has technology from China and Russia. This thing's spreading. It's metastasizing. That's for sure. All right, guys, I'm going to go ahead and sign off for now. We'll be back tomorrow with another live stream. Live trading, UK interest rate decision, and U.S. inflation. We'll have that about our same time, about 1 p.m. Eastern. We'll get in there. We'll be looking at TPO charts tomorrow. That's going to be a pretty good way to approach the trading the rest of the week. But we have a pretty good cushion. Remember, Tuesday, Wednesday, Thursday, we go hard. Friday, we'll see exactly where we're at on a Friday. That's for sure. And we'll talk about the psychology the entire way. Cash trading is a little bit different than being a fund manager. As a retail trader, I'm a cash trader. That's for sure. All right, everybody. Have a fantastic trading session. As always, trade the action well, and we'll talk soon. See you. A quick one before our live stream starts. If you're not already subscribed to our YouTube channel, we go live there every day trading the markets, covering world news, and talking through setups in real time. Hit subscribe so you don't miss the next session.
Still doom scrolling? Brain rot taking over? You'll focus tomorrow, right? But what if tomorrow never comes? What if it all started with one small choice? The world won't wait for you. Opportunity is moving right now. One decision is all it takes to shift your momentum. Fuel your mind and watch possibilities open up. Small wins stack up, focus sharpens, growth begins. Everything changes the moment you focus. Lock in and make the switch today. Bring your ambition into focus. Trade with switch markets.
Are you